Well, good morning, everyone. Thomas Montgomery Smart Money Alliance and IIMFL. It's a beautiful Thursday morning, August 6th, 2020, 7:59 a.m. Central. We have this training and support Zoom most Mondays through Fridays at right about 8 o'clock Central, which is essentially now. And this is where our financial literacy educators get together, whether they're a prospective educator or a current educator, and we kind of talk shop. What's going on? What's new? And ultimately, what can we do to help you be successful? We've in the other training sessions, and you can go to the iimfl.org website, click on the career tab. You've got the flyers of the workshops. You've got training YouTube videos. We're putting a lot of time and energy into providing you the tools so you can improve the financial literacy of individuals and small business owners, and obviously improve your financial outlook. Our flagship program, which I think we're all aware of, is the entrepreneurship program. And instead of reiterating that today, I wanted to talk about a new trade line. This trade line is available to each of you as a financial literacy educator, but it's also a funding arrow in our quiver as we're helping small businesses. So I kind of joked about this the other day, but it's a pretty good analogy. When I was a high school teacher a few years ago, we would start out the day by reciting the Pledge of Allegiance. And so that's obviously not what we're going to do here, but instead we're going to go ahead and recite our mission statement. Our mission statement is that we are a nonprofit organization committed to narrowing the racial wealth gap by teaching financial literacy, improving credit scores, and facilitating the development of minority-owned small businesses. It's about economic empowerment through knowledge, isn't it? All right, well, we hope to empower you a bit today by talking about this new trade line that's available. It has many positive attributes, but before you refer to it or reference it or talk about it, you need to understand it. And so that's the purpose today. So I'll go through this outline, and then we're going to take your questions. So let's start at the top. So it's a $100,000 business credit trade line. Now, business credit, what does business credit mean? Business credit means it reports under the EIN of the business. It is not a personal credit trade line. It does not report on your personal credit. It is not dependent upon your personal credit score. It does not affect your personal revolving utilization. It's business credit. So let's read the tagline. Up to $100,000 credit line, reported only under business credit, no personal guarantee, no minimum personal credit scores. It's available to startups, so there's no 2-year minimum time in business there. It's very attractive to many of the small businesses that we work with that don't qualify for funding through other sources. Now, I'm going to pause for a moment, and I'd like each of you to go to the Q&A box, and I'd like you to write the 3 words, well, the 3 C's. There's actually more than 3 words. What does it mean when I say the 3 C's of funding? And if you don't know, type you don't know. It's okay. It's not a graded test. But Angela, April, Kwong, James, Jennifer, Peggy, Peter, Robert, Rudy, Steve, Teresa, Will, Yvette, and others, I need you to go ahead and get involved. Go to the Zoom Q&A and tell me what the 3 C stands for. And if you don't know, it's okay to say that you don't know. It's all right, but we're going to know it before we move on because it's important. James 1, James 2, both responded. Thank you. I need everyone to take a stab at it. It's okay if you don't know. Not going to call anybody out, but we're going to teach this lesson here, and I want to see if you know already. And if you don't, it's okay. And if you do, it's great. 3 C's of funding. I'm waiting on you. You're going to type into that Q&A box. What does the 3 C stand for? This is important. If we're going to go out and teach financial literacy to small business owners, this is a good lesson for us. And again, it's perfectly fine if we don't know. Okay, so many of you responded, so that's fine. In general, to get funding, you need at least one of the 3 C's. At least one of the 3. Often, if you go to a bank for traditional funding, they'll often look for all 3 C's. But what we do in creatively helping small businesses, usually we only need one of the 3 C's. Now, with that being said, there's 2 types of capital, right? Debt-based capital, where we're borrowing money and promising to pay it back, versus equity-based. What we're talking about now is not equity-based, different set of rules. So let's go through the 3 C's of funding. And the relevance is that if a borrower, you, me, any small business, has at least one of the 3 C's, then they have a good chance of getting funding. When we run into small businesses that have none of the 3 C's, then we're going to need to work on that. Okay, C number 1 is credit worthiness. Well, that kind of makes sense, doesn't it? If in the past we've not demonstrated that we paid our bills on time, why would a lender think all of a sudden we've seen the light and we're going to start paying our bills on time? Now, credit is fluid, isn't it? It can change dramatically. So credit worthiness is one of the first 3 C's, is the first of the 3 C's. And of course, there's personal credit and business credit, 2 types of credit: personal credit off Social Security number, business credit off of EIN, which is the program we're going to be talking about today. Okay, the second C, and these are in no particular order, is collateral. So it's not unusual that if you want to borrow money, the lender wants to know, well, what are you putting up for it? So if you don't pay, they're not just out. So for instance, if we go, this is a residential example, but if we go buy a home, a residential mortgage, what's the collateral? The deed to the home, right? If we don't pay it, they're going to foreclose. They're going to go through a painful process. They're going to kick us out, and they're going to take that house as collateral. Car loans, obviously very similar, repossessing cars. Business loans, a little bit different, but the bottom line is the second of the 3 C's, and we're not saying you have to have all 3 C's. Listen carefully, but we need to have at least one of the 3 C's for debt-based capital. We don't necessarily have to have any of the 3 C's for equity-based. All right, so we've covered credit worthiness. We've covered collateral. Now we're to the third one, and let's scan through. James got cash flow. Robert got it. Monique has it. April, Jennifer. So a few of you got it. Cash flow is the third. And there's a little bit of a tip there, wasn't there? It's highlighted. So, well, why would cash flow matter? And this is a point of anguish for some small businesses. Well, if there's no cash flow, how does the lender expect you're going to pay them back? Well, I know that from your perspective, and frankly from mine, it's like, well, okay, give me some capital, I'll invest it in my business, and it's going to create the cash flow to be able to pay it back. And that's an argument that can be made. But if there's not adequate cash flow now to cover to service the debt, then the lender is worried, well, what if this pandemic gets worse, or what if there's some sort of other disruption to your business, so your earned income isn't kicking in as planned? How are you going to pay it? Because that's the number one concern of lenders. Will they get paid back? So in general, if we want to get funding, and this is true for me or for you or for any small businesses that we're helping, that we're teaching, that we're educating, we need them to understand the 3 C's of funding, and they need to have at least one of those 3 C's. Again, credit's easy, right? Because credit can change dramatically very quickly. We're not stuck with bad credit, so we're not really worried about that. Collateral is not quite so easy just to change your collateral position in life. So that one is a little more stagnant. Cash flow is much like credit. cash flow can change considerably from one month to the next. Now, that's a dual-edged sword, isn't it, right? A lot of small businesses don't have the cash flow now, August 2020, that they had back in January of 2020, right? Because economic conditions have changed. And I often talk to small business owners that are frustrated because their cash flow is not where it needs to be, or they don't even have any cash flow now, and they want to borrow money. Well, we have to have at least one of the three C's. And I'm not saying you have to have cash flow, but it certainly is helpful to be able to demonstrate to the lender. So what we have to do, all of us as financial literacy educators, is move away from the emotional side and look at the factual side. And it makes sense, right? If you're going to loan me money for lunch today and you knew I was stone cold broke and had no ability to pay you back, you may give it to me out of mercy, but it wouldn't be a transaction where you're expecting to get paid back. But if I have a job and I just forgot my wallet, or I'm getting paid again tomorrow, then you might say, well, it's a better bet. So 3 C's of funding: credit, collateral, and cash flow. This model is based upon cash flow, which is very preferable because we can alter cash flow almost immediately, and I'll show you how. So let's move ahead. So this new $100,000 business credit trade line is open pretty much to any industry, including us. As branch managers, as financial literacy educators, we can access these funds. It's unrestricted use of funds. So unlike an SBA loan that has to be used only for certain things, or other types of capital that have specific limitations, we can use this business credit trade line for whatever we want. Again, it is a business trade line, which means there are no personal guarantees. And that's great, right? Because some business loans still have a personal guarantee. Not all, but this does not have a personal guarantee. And it is not based on consumer credit, personal credit. Better yet, it reports to your business credit. It doesn't report to Dun & Bradstreet, which you hear us talk about a lot, but it does report to Experian Business, which is under the EIN. And so by using this type of business credit trade line, we can get funded and rapidly build our business credit at the same time. There's not the normal, 2 years in business. Startups can qualify. And we can go up to $100,000. Currently, that is the max. That has nothing to do with us or guarantees or anything that's on our side. That's the maximum that the lender will do. The client gets to pick the amount, and I'll show you how in just a second. And it is a true credit line. It's a true credit line. It's not credit cards. It's a credit line. So you can pull from it if you want to. You don't have to pull from it. Now, it happens in 2 stages. You're probably like me, and we all like simple, but life isn't always simple. And so I'm going to just shoot you straight and tell you exactly how this trade line works. After our webinar today, you may dismiss it as useless, not going to hurt my feelings, or you might say, that is another arrow in our quiver of how you individually, as a branch manager or financial literacy educator, can get some capital, and which I'd recommend, and certainly could be available to other small businesses as well. But none of what we do is too good to be true. We do not have some magic wand, of course, to just get people money, right? You have to qualify, and that's, you hear us talk about it ad nauseum. What we're really good at is helping small businesses identify the right type of capital based upon their circumstances, and then helping them meet the underwriting criteria. If they already meet the underwriting criteria, then great. Then that box is checked and we go to funding. If we don't yet meet underwriting criteria, then we're going to have to make some changes, because just working with us, we'll have clients periodically that will enroll with us. We'll go through the process, and there's some work left to do. They don't yet meet the underwriting criteria of the type of capital that they're going for. And that's the reality. You and I can't change how the banks underwrite it. we can understand it and help people navigate it, or we can move away from debt-based capital altogether and focus on equity-based capital raising, which doesn't have near the restrictions. Okay, so with that, there are 2 stages to this $100,000 credit line. 2 stages. I can't help it. I wish there wasn't. I'm sure that you wish there wasn't, but there's 2 stages. So what we're going to do is we're going to go through the 2 stages. The first stage is that we apply for initial credit line, and that's going to be a maximum of $10,000. And not everyone will get the $10,000, but it's the first step. It's a necessary first step. It's not a bureaucracy that we've created. It's just reality. Okay, so with that being said, this first stage is capital letters, bold, based upon personal credit worthiness. However, what we're seeing is that nearly everyone's approved. So even if we got really crappy credit, we typically will still get some credit line. Won't be as much as $10,000, of course. Then we go to stage 2, which is the main credit line. It is based upon cash flow over the past 3 months. Remember, we talked about the 3 C's. Well, if we don't have good cash flow, which is commonly the case with the folks we're working with, we're going to create that cash flow that's needed. And I'm going to show you how to do that in a second. Legally and ethically, don't worry about that. And then wherever we're at, then we can apply, get the trade line, and then we can go back and request increases quarterly, every 3 months. And it's not just a blanket statement of, oh, well, you can try to get an increase and we'll see what happens. It's the intent to continue to grow it because of the history. So what you and I probably realize right now is we're in the midst of an economic and health pandemic, right? So lenders right now aren't really sure who is on good footing and who's on weak footing based upon changes in their business. The point is a lot of small businesses, well, a lot of businesses total, from Fortune 500 all the way down to Main Street America, have a lot less cash flow now than they did before. Well, the way you may think, hopefully not, but the way clients often think is, well, yeah, I can't help that. That's beyond my control. I just need lots of money. I want to borrow lots of money. But again, using cash flow as a prerequisite, if our cash flow is dipped, then we can't afford to pay back as much as we used to. So we may have to take a staged approach. All right, so now let's go to the mechanics of it. This is not a merchant cash advance. So we're not stating an opinion on merchant cash advances. It is not what we're talking about. So don't misinterpret. It is not an MCA, as they call it. But it is based upon credit card transactions. So as you're studying and learning the underwriting algorithms here, you say, oh, okay, I see. So if I can drive a bunch of credit card transactions, that creates documented cash flow, creates credibility, creates legitimacy, and now I can use that really as my collateral to get funding. Now, some people will back up and say, well, I don't have that. This isn't going to work. You've got to stop people from coming to early conclusions and help them navigate. That's, maybe we're not financial literacy educators. Maybe we're financial literacy navigators, because funding is available, but you have to navigate the waters and meet their approval. So let's talk about that. If they currently don't have a merchant account, we can help them set that up. But they will need a merchant account to receive credit card payments from clients, right? Because this type of capital, not all types, but this type of capital is predicated off of credit card transactions. That's a credible stream of income that they objectively can track how much cash flow is coming in. And thus that cash flow gives them confidence in your ability to pay the credit line back. And it also serves as collateral, of course. Now, let's say that they, the merchant account's not an issue. So they have one, fine. If not, we'll help them get one. But what if they don't have any credit card transactions? They're not enough. Maybe they're a startup, so they have no business coming in, or they've been really devastated by the pandemic, and so their business is way down. Not a problem. We need to increase their credit card transactions to bump up the amount, because it's a 1-to-1 ratio, by the way. And I know some of you are asking, like Diamond asked, well, how much? There's really no minimum, but we would be foolish to think that there's not a correlation between the cash flow we bring in and how much money we can access. So frankly, it's a 1-to-1 ratio. So if we're bringing in $20,000 a month, guess how much of a credit line we can get? $20,000. If we're bringing in $50,000, how much can we get? $50,000. Up to $100,000. Now we could be bringing in $2 million a month. The maximum on this trade line is $100,000. But again, don't let people get dismayed. They're saying, well, if I had that type of money coming in, I wouldn't need funding. Well, a business needs to be vibrant, right? A business needs to have income coming in. It can't be a hobby, and it can't be on the ICU deathbed on a ventilator. They call it a zombie business. A zombie business is a term in the financial term that sure, you could give them money, but it's going nowhere. So what we'll do is, if their business, whatever it is, if they sell donuts, if they are a hairdresser, whatever it is they do, if they can't flip the switch and start making some money and selling services or goods, and if they're wanting to use this, receive payment off of credit card transactions, then what's the awesome alternative? You and I have the solution to it. Well, great. How about you come aboard, do the background check, become one of our financial literacy educators. There's no cost other than the background check, which is reimbursed, and start teaching some workshops. The average workshop will have 25 people in it. You're going to make 200. Well, actually, keep in mind, they're going to collect payment for the full amount from each participant, which is the $396. Now, they keep half and they pay us half, but this is based upon gross credit card transactions. So this is actually a mistake. I should have put 10,000 here, right? Because if you have 25 people paying approximately $400 a piece, each workshop actually drives in $10,000, not $10,000 into the business, of which they keep half, and half comes to us, of course. So it's really just a formula of how big of a credit line do you want? You want a $10,000 credit line? Then teach one workshop a month. No, that's not enough. I need 20,000. And again, they could do their primary business. If they can just go sell more donuts or cut more people's hair, then that's even better for them, right? But some people don't have an economically viable business model at this time, or they need funding to be able to launch it. So if they wanted 20,000, we'll teach 2 workshops this month. No, I need 50,000. Okay, well, let's teach 5 workshops this month. No, I want the full 100,000. Well, then go teach teach 10 workshops this month, because that's how this source of capital is predicated. Again, there's other sources of capital that have other underwriting. I'm just explaining kind of a slam dunk, really, where anyone can go out and get up to $100,000, even if they're starting on fumes. All right, so as the second bullet here says, you can get 100% of what you process in monthly credit card transactions. So again, that's gross credit card transactions. They do, and this is not our fees. We don't get any part of this, so don't get mad at me. I'm just a messenger. But you might say, well, what's the cost of this capital? They do charge a $99 setup fee. I can promise you, I don't get a penny of that. You don't get a penny of that. There's no flexibility. That's them. And then they do charge $10 a month. I don't get a penny of that. You don't get a penny of that. We have no flexibility. That's the fee to admission. The interest rate on the credit line is 14% plus prime. And you can Google what prime is. Prime changes based upon how the Federal Reserve sets it. So it's certainly not merchant cash advance type of fees, which are very, very expensive, but it's not as low as the SBA loans that we do. The SBA loans that we do are less than half of that, but it is a source of capital that is under the EIN that is easily obtainable by anyone. All right, so now we're going to go through your questions, your comments, your concerns. Again, I have no dog in this fight, as they say. If you like this new source of capital, it's something you may want to use. I think you should consider using it. And it's something that we may be helping clients with as they come through and we're building their loan packages and see if they qualify. If they don't qualify, of course, we can help show them how to. But if you want to dismiss it because you've got better ways, then that's okay. All right, so Peggy asked about contracts. So this is very specific. This source of capital, and you're right, contracts and accounts receivable is a type of collateral. It wouldn't apply to this type of funding, but you're right. Accounts receivable that you have, Peggy, would count as one of the other 3 C's and might open up other types of funding. But this is, of course, based upon credit card transactions. It's not negotiable. It's not like you can persuade me to say something different because I'm just the messenger. I can't change the message. Okay. James asked, when do the payments start? Monthly, once the credit line is extended. Most business funding does. I'll have people come to me, well, I want to defer funding for 6 or 12 months. I wouldn't anticipate that's going to happen in business funding. That's not the norm. Nonprofits, yes, sir, Rudy. It can be for-profit or nonprofit. Diamond asked about the cash flow, and I think Diamond wrote this before we got to the point. It's whatever it is. So if it's $5,000 a month, that I guess the minimum in our model here would be $10,000 a month by teaching workshops. But there's no minimum, but there is a maximum. Diamond asked, does a credit card have to be in our business name? We didn't talk about anything about credit cards. This has nothing to do with credit cards. Now, maybe you're referring to the merchant card transactions. And of course, there needs to be a match between the amount that your business has in credit card transactions and the amount of cash flow that your business has and the amount of capital you can access, of course. And then Diamond's asking about credit cards again. Yes, Wells Fargo is the only national bank that I know that has a secured business credit card, but that seems off topic, Diamond. I apologize. I don't think that has anything to do with what we're talking about here, but that is a correct statement. James is asking how we get started. So we always start with a loan package, right? So when you have a client that, this is just simply one type of funding that's available. It's not a separate program. It's not like, oh, you guys are changing things again. What we're just trying to do is for our financial literacy educators is to help you start becoming more aware of some of the different funding sources that are out there. And this is a new one. It's recently available. So what you would do is take the client, James, and then help them enroll in one of our programs. We'll put together the loan package, and then this could be the outcome from that. What you could also be doing is actively, James, recruiting financial literacy educators. Get more people out teaching, and that's going to generate income for you, and it's going to generate income for them. And you can have them setting up workshops for you if you want, driving up your credit card transactions. It's all good. But how you get started is to complete the loan package, and this could be an output of that loan package. And Monique, I suspect so. I suspect some of your clients will qualify for this. Yes, ma'am. And Kwang's asking, similar to Monique. Yeah, so our current clients that are in the Capital Ready 2.0 or even those in the Legacy 1.0, the SBA Express, yes, this is not a new program. This is just a type of funding that has become available as of August, as of now. Rudy asked the minimum amount. I believe the minimum is 5,000, the lowest that they'll go. But I'll have to check on that. I know the maximum is 100,000. Now, I should go back and answer Rudy's question. So again, there's initial credit line, and then there's the main credit line. The initial credit line is really getting established with them, and it may be less than $5,000. It could be small, but the bottom line is the main credit line is up to $100,000. So Diamond asks, so in order to receive the $100,000, there isn't a minimum amount of cash flow? Well, I think you're missing the point. It's a dollar for dollar ratio, right? So Diamond, if you have $10,000 a month coming in on your credit card transactions, how much would you qualify for? $10,000. If you had $100,000 a month coming in on your credit cards, which would mean teaching 10 workshops a month, how much would you qualify for? Up to $100,000. So it's a 1-to-1 ratio. And again, it makes sense. So when you peel back, you always separate the emotions and just say, well, okay, it makes sense. So this lender is looking at how much money my business is bringing in. That's documentable without exception, right? Credit card receipts, no question that those numbers are right. So they see I've got cash flow coming in so I can afford to manage and pay back the credit line. And then also it's collateral, right? Because those credit card receipts, if they've been coming in for 3 months, they most likely will continue to come in. So what we need to do is, if any of you want to leverage this, it's really not much different than what we've been talking about. You need to start teaching. You need to get with Jennifer and get your workshop set up. And we should be teaching the entrepreneurship workshop program. That's going to pay you $396 up front, of which you keep half and half comes to us. You're going to teach that 4-weekly class. Plus, you're going to make a boatload more money on the back end, which is based upon setting up the indexed universal life policies, the smart money plans. But the insurance company nationwide that we work with is going to pay you, and they pay weekly, but they're not going to pay you by credit card transaction. So the nationwide, the IUL, the life insurance income is not going to pad these numbers. That's just going to be a direct deposit into your account in ACH, which is valuable. The credit card transaction part, looking at this from a financial literacy educator perspective, is going to be based upon setting up workshops, working with hosts. We went into great detail yesterday, 10 different types of hosts that every one of you should be out talking to. And if you don't understand that, or if you missed a training, or you have any questions, Jennifer sits here every day hoping that you'll reach out to her so she can help you. Teaching 10 workshops a month is going to keep you busy, but it's not overwhelming, right? It's teaching, about 20 hours a week. I was a college professor. That's about how much time I spend in the classroom, about 20 hours a week. And so if you teach about 20 hours a week, 10 classes, then you're going to be able to earn the type of income to max this out. All right, so Annette asks, if the startups are just what is stated, zero funds, and they need a startup business line or cash for their startup business, can they still receive the $100,000 trade line? Well, Annette, I'm not going to answer your question respectfully because I need you to come to that conclusion. This is built off of a 1-to-1 ratio. So if they're a brand new startup and they have zero funds, will this work for them? If it's based on cash flow, would it work for them, Annette? No. Can we make it work for them in a 3-month period? Absolutely. Get them on your team as a financial literacy educator, get them out there teaching, and in 3 months, 90 days, it'll work for them. But right now, if they're a startup with zero funds and zero credit card transactions, how much do they qualify for? $0 off this funding source. You always have to remember, different sources of capital have different underwriting criteria. We're just talking about this type right now, aren't we? All right, let's see. Annette's got it right. Diamond has a question about getting paid. Okay, so let me pause the screen share for a second here. And let's go over to where Annette's question is. And then I'll resume the screen share. Okay. So Annette is asking about the entrepreneurship program. I'm sorry, not Annette, Diamond. We're talking about the entrepreneurship program, which is our flagship. This is what you should set up. You should start a new one of these every week. So you'll have one class you're teaching this week or next, 2 weeks the following, because they're 4 sessions long. And so you're paid twice. This is what Diamond's asking about. You're paid up front. We do a 50-50 split. They can pay $99 per week to you, and you can have auto reoccurring credit card charges. So it's super simple. So you put it in once, you get $99 today, and then a week from today, they're billed again, and a week, and then a week. And so you collect that. We split that 50-50, or you can collect the full $396. You do not have to collect it via credit card. If you want to use the funding program we just talked about, it would be advisable because it's padding your numbers. And so she's asking about the back end money. So you're paid up front for teaching the curriculum, and week 3 you're going to meet with them, Diamond, after week 3's group class in person. You're going to meet with them or virtually or telephonically, do their financial needs analysis and help them set up their smart money plan. If you don't remember what a smart money plan is, go to the career page, and there's a white paper here. And so then that's where you're making the back end income. You'll make a lot more off the back end income than the front end income. So hopefully that answered your question, Diamond. Normally 75% of the class attendees will write a policy with you in IUL. And so it's good numbers. All right, so, and then Robert's asking about the workshop page from yesterday. I don't know that we sent that out, but certainly it was in the recording that we sent out. If you don't have that, you can get with Jennifer and she can get it for you. Okay, so who has any questions about what we've covered today, which is not depicted on the screen at the moment, but essentially it is a new source of capital, just recently become available, it's a business credit trade line, a true credit line, reports to Experian Business, no minimum credit score, and it's easily obtainable. It's up to 100,000, up to 100,000. And of course we talk about how to access it is we need to create a loan package for the client, whether it be you or someone that's going through Capital Ready or the SBA Express or of course with the entrepreneurship program, what do? We create a loan package. That's the process. And then when we get down here to week 4, that's where you're teaching them about the 3 C's like we just discussed. And then we'll take their file and do a capital match. And they may very well qualify for that. If they don't qualify for that, that's okay. They could still become one of your educators, help you go out and teach, and in 3 months they could qualify for it. I know people want money now, but all you and I can do is we can teach them through the curriculum. We can help them put together their loan package. We can do a capital match, but at some point we have to deal with reality, right? And so if they don't qualify for the type of funding that they want right now, then we need to work towards meeting that criteria. One of the great things, though, and we don't talk about it enough, is the whole equity side. So if they don't qualify for a loan of one type or another, debt-based financing, we can always go to the equity markets. All right, any other questions anyone has before we move forward? All right, Diamond says the free credit repair program, let's go up to that. Here it is. Free credit repair program. And yes, yeah. So if you're going to enroll clients in the free credit repair program, Diamond, which you're welcome to do, they're going to go through a 3-step process as depicted here on the free credit repair program of the website. You're going to do a free financial needs analysis with them, FNA we call it for short. We've shown you how to do that. We've taught you how to do that. We use the FNA form here. If you've not seen that, you don't know how to do it, get with Jennifer, she'll help you. And then secondly, let's go back to the other page. Then you're going to have them go through, the financial needs analysis, and then you'll most likely you'll see that they have a need for saving money or protecting assets. They'll set up a smart money plan with you. That's where you're going to make the 500 to 1,000, or it could be a lot more. That's just a general range. You're going to teach them a credit education in person or online using the award-winning FDIC curriculum. and then they're going to see results. Any other questions that anyone has? Any questions? All right. Well, thank you all. Let's go implement. Have a great day. Talk to you soon. Bye-bye.